Interest rates are spiking because Trump was just elected, and we are going to see a very different housing market in 2025.
Yeah, more specifically, Trump is putting certain people in place and talking about certain ideas that the market believes will create a short-term inflationary market.
So watch to the end of this video to see our 2025 real estate market prediction.
Here we go.
It's the Tim and Rene Real Estate Talk Cigar Show.
Hey guys, welcome to our channel. If this is your first time here, make sure to hit that subscribe button. We've got a unique deal of the week list down below. Be sure to sign up for that to see the best real estate deals hitting your area. Now, Rene, let's talk about where interest rates have gone in the last month. What are we seeing on all these different loans?
Oh my goodness, there's so much to talk about, but I'll break it down very simply. We have a new president, and he's been talking about how he's going to change and shape the market, the economy in our country. In fact, we're now starting to see our appointments. Who is Trump picking? Who's going to lead certain departments? And the markets react. One of the big topics is tariffs. What Trump wants to do is add tariffs to ally nations, because what he believes is that this is a free market and we want to create jobs and opportunities here in our country. By adding these tariffs, then companies will think, well, maybe I should build shops in the US so I won't have to pay these tariffs. As a result, interest rates for the short term have been ticking up. For a 30-year fixed conventional, we're looking at around 7.25%, FHA 6%, 6 1/8. It's all based on credit score.
And in the real estate market nationwide, we are seeing houses sitting. We are seeing a lot of people not able to afford. There was just recently an article that the number of first-time home buyers is at the lowest it's ever been. So we really are in a market of own nothing and be happy. We are seeing the level of affordability continuing to rise. People are seeing that getting into a home is becoming harder and harder. And with that, the market has gotten softer. Us working real estate day in and day out, we do see the buyers that are making moves. They're getting incredible deals because of the houses that are sitting.
Yeah, locally, what we're seeing in our market is exactly what Tim mentioned. Buyers are getting deals, but at the same time, we have sellers that aren't willing to deal. And so there's this really weird navigation that's happening in our local market, where the sellers that need to sell are selling, and those that want to test the market are either taking their house off the market altogether or letting it sit.
And so part of the different winds that are hitting right now and that are affecting the real estate market is inflation. Jay Powell, he was really adamant about keeping interest rates high at that level to bring and really see some deflation. And really, groceries have only seen they're at a 3% inflation rate right now. Some stuff like energy has seen an actual deflation where it's gone below zero, but real estate has remained at about a 5% inflation. And what that really has indicated and shown us is that real estate is kind of a train without brakes right now, in that you are seeing shelter just continuing to rise in price, and it can't really be reined in by stuff like interest rates.
Tim mentioned Chairman Powell. He's the board chair for the Fed, and they have a dual mandate. Their dual mandate is to keep inflation low, as well as helping spur and create more job opportunity. So the two big data points that they've been looking at for the last few years. And right now, what Jerome Powell's saying is the economy's good. At the local level, we see something different. And so that's really the crux of the conversation.
So we're going to talk about some doom and gloom stuff later, but right now we're going to get into the feel-good fix, because I think everybody needs a little bit of a feel-good fix in their life. Markets are down, affordability is bad, so let's talk about some things that make you feel good.
Do you remember Monsters, Inc.? And the premise of the movie was simple. The monsters went into the rooms at night to scare kids, because the reaction of fear created power for their world. And the weird thing, or the interesting thing, is they thought that's what was the most powerful, fear. But what they soon find out is that even more powerful than fear was what?
Was laughter.
So check that out. And I know that a lot of times we have that doom and gloom, and we are afraid of what others may do, what the government may impose. That's true. And yet this is a reminder that even though fear does come at us, hate affects us, the power of laughter, of good relationship is so much stronger.
You know, a lot of investors will talk about the fear and greed scale, but when it comes to a big decision like purchasing a home or making these big decisions for your family, a lot of the times you're making those decisions for something that's good and something that's joyful, a place that you're gonna, you know, keep your kids safe at night, a place that you're going to raise your family, a place that you're gonna have a lot of shared meals together.
So when you feel that fear stopping you or pausing you from reaching out to an expert, that in itself is very powerful. But when you have the courage to just trust that you're going to get the information, that's where being an informed learner helps you make an informed decision for you and for your family.
So many people right now are backing out of real estate transactions. You're seeing a lot of houses getting kicked to the curb, and it's because a lot of people right now in this market are making fear-based decisions, and they feel like they have to make this decision. They're backed up against the cliff. But what I notice when people are making informed and educated decisions, and they're doing it alongside people that share that same joy, same drive, is that they will make solid foundational decisions that not only build their wealth for years to come, but build their joy and happiness for years to come.
Tim, you're bringing up a good point. I just thought about this as you said that. Getting stopped by the information that exists, that paralysis of analysis, that in itself is a decision. And so you have to be aware of that, you know, be self-conscious of it. And that in itself will help propel you to make the decision to call. Is this something that I should do for my family? And sometimes the answer is maybe you should wait. And sometimes the answer is pretty surprising.
And that's the good thing about working with people like Rene and I that don't make fear-based decisions, is that we won't be fearful in telling you to hold off in making a decision and saying don't do that. Because if we are making fear-based decisions, our only answer will ever be yes. We'll just be a yes man that says yes, do it, yes, do it, yes, do it. And sometimes the right answer is no.
Sure. I mean, I had a conversation yesterday with a set of clients, and by the time we were said and done, we're like, you know what? I think waiting 4 to 6 months with this particular couple, that's the best strategy.
And this is the part that you guys are watching for, is our 2025 predictions for where we see the market headed.
Yeah, what are you thinking, Tim? Because, you know, initially from what I've seen the last few years, what I've seen as a result of our election and our president-to-be, I have a feeling that we're going to start seeing movement that second quarter of 2025.
Well, I really think the real estate market is like, I'm going to say a tornado, because you have a lot of hot winds meeting cold winds and creating the storm that we are currently in. So in the winds that are hot and fueling this real estate market that we've seen since 2020 is the lack of supply, the low interest rates. So many people are sitting at 2-3% interest rates and they are not budging. 30% of all investment properties nationwide are owned by mom and pop investors, and I can guarantee you most of those are owned outright or at very low interest rates. So you're seeing a lot of inventory locked up by that, and you're not seeing, even when we saw the drop in interest rates, unlocking or freeing a lot of real estate. Now I'm working my first short sale right now. On that short sale, we're basically breaking even for the client. There's not a lot of short sales hitting the market, and they're only coming from people that have made those fear-based decisions in the last few years. So you will see homes that were bought at a very steep price at 22 because they made that fear bid, and now they're backing out.
In 2023, remember this, January 2023, the media was saying properties are going to go down 20%. They were also talking about the crash that happened in 2007, 2008.
Right.
We all remember that. In fact, in the last 82 years of recorded history, real estate transaction in this country, there's been 6 years where real estate values have dipped. Out of those 82, 5 of those 6 years were 2007, 8, 9, 10, 11. So even in this inflationary market, in 2023, where people were afraid, when you look at the actual data nationally and even locally, property values went up.
So that's the interest rates, that is the inflation, and that is affecting the supply, which there is very little of it as well. So those are the 3 hot winds blowing in against the cold wind of affordability, which is keeping a record number of people renting. So what I'm going to see and what I'm going to say in the 2025 market is that we're going to continue seeing a trend nationwide of the own nothing and be happy And so when I say that inflation is kind of leading real estate to a higher and higher price, I really think you're gonna see under the Trump presidency, inflation continuing to affect housing in an upward trajectory. So what that means is that right now we're seeing renters priced out of this market, right? They sit down and they look at the mortgage price and they say, well,
Renters priced out of buying homes?
This is kind of an alarm bell that I'm ringing, because you know the affordability has never been this tilted in against the buyer or the borrower. With this own nothing and be happy, people are stuck renting, they're stuck kind of where they're at until something budges, until something changes. And what I think is gonna happen is that inflation is gonna continue not only rising the price of housing, but also rent. So it's gonna keep people in that same locked in position where they're at. There are ways to get out of it, and one of that is to like sit down and look at your financial plan and look at your goals and to see where your debt's going and where your income's going and how can you make the shift.
So then the caution here, if I'm understanding you correctly, is when you believe that you may not buy a home, you think, I can't do that. I mean, the homes are way too expensive. And you're caught in a position where you're renting and your rent is pretty expensive. Then the next step is actually to inquire.
Yep.
And just see if that's perception is in case the reality.
Because the thing with inflation driving up, and this is the part that people don't normally look at, is that inflation does not affect the price of a fixed interest rate mortgage. So if you lock in at a $2,000 mortgage today, in 5 to 10 years, when inflation has eaten away at your dollar, you know, whether you're putting your money into a high yield savings account or into crypto or into the stock market in order to balance against inflation, your mortgage is going to stay the same and you're not going to be affected like renting is. So when we say own nothing and be happy, that is the perception and the fear speaking to people right now and saying you're going to be stuck and locked into this position. Now, I do think that inflation is going to continue, and there's a reason that there is that common and very prevalent national perception about where real estate's headed because of how much inflation has eaten away at the average consumer's spending dollar. You go to the grocery store, things are a lot more expensive. You've seen car prices spike, they're coming back down, but you've seen housing prices just take off at a level. But there are
20% housing values went up 20% in 2022. That's a lot. You're making me think of a client that told me in 2014 she didn't buy because the houses were too expensive. She bought in 2022. And that's when she told me, she's like, and now they're even more expensive. So what do you think is going to happen in 2032? If you don't buy now, are the house values going to be that much higher in 2032?
They will continue to go up. I mean, historically speaking, when you look at the historic housing chart, you've got to take the blinders off from 2008 and you've got to look at all these charts. And the thing about watching any other YouTube video or going on Reddit and getting your information is that if you just use one piece of data to make your analysis of where things are going, you can make any number or chart look like and tilt it in your favor. But when you start stacking everything up and you look at the historic lack of building that happened from 2008 to 2016,
still continuing.
When you look at the number of houses that are locked into owned outright or owned at less than 50% of the home has a mortgage, it is pretty revealing when you look at all of these numbers. And so I would really say that if you're in the driver's seat and able to make the decision, I would say that 2025 is going to be a great year to be putting your money into an asset that's going to continue rising with inflation.
Hey, you're making me think of Geico. You remember those commercials? 15 minutes can save you 15%. The funny thing is that, right, if you're curious, is my perception of my ability to buy reality? Take 15 minutes to call and ask questions, because you might find out that you can. And the rent and the mortgage might be similar.
So I will not be surprised when we see housing prices continuing to go up in 2025. But prices going up 5 or 10% in 2025 won't be a huge shock, even if interest rates remain at a 6 to 7%.
Nationally, home values went up 6% in 2023. Locally, it was around 3%.
I mean, and this is relative to all the bloodbath that's already happened, a relative bloodbath. You've seen a lot of inventory sitting in places like Las Vegas, Austin, Texas, Boise, Idaho. So those are places, and even Portland, Oregon, which has had a bad PR in the national news. You're starting to see money coming back into the Portland area, and you're seeing people kind of have a paradigm shift.
Oh yeah, and I'm seeing people that are reaching out with lower interest rates in their current home saying, I want a refund, pull some cash out because I'm ready to buy the next place. is they are willing to let go now of that 3.5% interest rate so that they can pull cash out of its equity because home values went up significantly.
Yeah.
And now they can use that cash to make that investment purchase or buy their next primary.
So if you're looking for the weekly steal of the week, I've got a unique house for you down below. Sign up for that, provide your email, and you'll get a once a week steal of the week deal in your area. So that way you can start making calculated, not fear-based decisions.
Steal of the week is this delicious Diesel Disciple cigar. San Andreas wrapper, Ecuadorian Sumatra binder. It's really tasty. It's a lot smoother than what I anticipated.
Subscribe down below to continue following us for real estate advice and just to enjoy the cigar and company with us. We're tracking the market at a local and national level, so definitely reach out if you're looking to make that connection.